What is this labour market report likely to deliver?
Yeah, I think we do see a bit of an increase in terms of job creation. I think that's in the short to near term. We looked at the read yesterday from unemployment. That sort of steadiness come in line or in equilibrium where the market is currently. We are in sort of this sort of holding pattern at the moment. I do tend to see that unemployment will increase when those potentially those rate cuts come in the sort of latter half of next year. That's really what I'm looking for first. So we aim for that soft landing, but then unfortunately the byproduct is increased unemployment.
So with the recent pullbacks, the year is young. What is the market now pricing in? It's really pulled back from the sort of 6 interest rate cuts that they were expecting just a couple of weeks ago.
Yeah, I think the market has that pricing in has already happened through that sort of late November into that December rally. Now what we're seeing is that market normalising because I think there is some concerns, and obviously on the latest batch of Fed minutes, what we are actually seeing is a little bit more hesitation from the Fed, where we were talking about sort of March in terms of the first rate cut. I actually think we're probably aiming more for April, middle of April, before we see any moves or concrete decisions by the Fed.
So what does 2024 portend for us?
It's an interesting one. I think people are getting a little bit ahead of themselves in terms of investors and really trying to hold on to this optimism which is coming through. Rate cuts will be determining everything. I think we see a normalisation, a broadening of the market away from, well, at least away from the magnificent 7. And then what we look to see is to get a little bit more sort of equilibrium on those particular equity indexes. I think there is a move now probably to value, to bridge that gap or that divergence versus growth, and also I would probably be looking potentially at some sort of smaller cap indexes and stocks to really start to sort of gather some steam towards the back end of 2024.
Absolutely, and Ariana, this of course brings us to what you actually look for here. Which is the asset classes you're interested in? What about equities? I mean, how do you really at the moment sort out the wheat from the chaff here? And you can also talk about value versus growth if you wish.
Yeah, I think the equity play, you're obviously going to park a substantial amount into those large cap stocks, taking some profit off those in the early part of 2023, and then look to some of the more sort of industrial, some banking stocks as well. I think the wider regional banking stocks will get a bit of an uplift. I think that they've got a little bit more room to move, and then I also think the commodities play. I'm still looking to park some money in the gold market, looking at around 2,300 by year end.
All right, and then, that brings us nicely to talk about what is likely to happen with China. I mean, it would seem as though, we can't fall much further, surely. And what is the sentiment you're getting from your clients right now? Is there a move back, given some of these stunningly attractive valuations? But, of course, they're valued like that for a reason, too, of course.
Yeah, exactly, Richard. I think everyone is seeking that value. I think the steam has run out in terms of valuations from the bigger sort of big cap stocks. The issue or concern is, I guess, all pending on the Chinese government and obviously the play or how they look to manage or navigate the current economic situation there. So I think they do need to make some more stimulus change, some tax cuts to really encourage and maybe potentially some import tax cuts for potential other countries looking at China again. They really need to re-energize the market, but also without taking it, I guess, shaking the market too much as well.
Okay, and of course it's one which is occluded as ever with geopolitical risks, which seem to be one of the alphas in the market currently right now. With that all in mind, does that make you, you talked about de-dollarization in your research. Give us a sense of why you have come to that conclusion, because it often seems to be the haven play, the greenback.
Yeah, it has been the safe haven for quite some time. I think we see some of the fund flow from dollar into sort of gold. That may start to regain its safe haven status. In terms of de-dollarization, I think it's just more from a trade perspective and supply perspective. That would actually help going back to the China discussion earlier in the show, I think that will actually help, really stimulate those sorts of economies, and obviously not have such a heavy reliance on also those debt levels against that greenback.
Yeah, I mean, that just brings me to what you are really at the moment. If you had to make one bet, what would it be for 2024 here, Oriana?
I think what I'm going to be looking at is to venture out of big cap stocks into small cap stocks and those smaller cap index, looking at the Russell 2000, Russell 1000, and I think there is some also some value play in UK equities. I think they've been in the doldrums for quite some time for now, and I think they're going to get a bit of a lift from investors. I think there's value to be had there.